Okay, let us start with understanding the nature of PPE. What are the difference of property, plant and equipment compared to other assets? Under AASB number 116, it defined property, plant and equipment as asset held for use in production or supplies or good. For example, machine, yeah, it used for productions or services or for rental, maybe building or maybe for administrative purposes. So all these items with this kind of usage fall under property, plant and equipment. And these assets are expected to be used for more than one accounting period, more than 1 year. So the useful life is more than 1 year and is with a specific use within the entity. For example, the machine is used to manufacture certain product, okay? Or the building is used for office or factory. And the nature of this asset is non-current. So this is the easiest descriptions about property, plant and equipment. Normally, property, plant and equipment can be divided into several classes. The first one is land, building, machinery, motor vehicles. All these fall under PPE. Okay. So under PPE, there are few things that we need to study, we need to discuss. Number one is what are the mechanism, what are the rules to recognize this asset as PPE. Number two is what is our initial measurement? What value we should put for these assets? The next one, after the initial measurement, we might remeasure the value of the PPE. So we have several models there. So how to process, how to record the subsequent measurement done after we already bought or purchased the assets. The next one is how to recognize the assets, and finally what kind of disclosure needed in our financial statement or corporate reports. So let us move to the first one, the initial recognition of PPE. Okay, first you must understand that cost of this item can be recognized if there are two conditions here. Number one, is a probable that the economic benefit will flow to the entity if that asset will bring economic benefit to the entity. So that's number one. Number two, okay, the cost can be measured reliably. So the cost can be measured reliably. So when we spend money to buy a building or a delivery van or machine, we expect to receive some kind of benefits. For example, if you have bought a building, purchased a building, so that building can be used for your office. So you don't have to rent. You don't have to rent other space. So that saves you some amount of money. Or if you have delivery van, it can save you some transportation costs or help you to deliver goods from one location to another location. So that is what we call as economic benefit to the entity. Number two, we can measure the cost. If you purchase one item, the building, you sign certain contract and documents that's clearly stated this is the selling price, this is the purchase price. So it can be measured reliably. So what's term reliably refers to recognition of PPE when measurement purpose to faithfully represent the economic substance of item and is free from material error or bias. So these are two criteria, important criteria in determining the cost that should be included when we want to recognize a PPE. Okay. Second part is the significant part approach, where the total PPE of entity may be broken down into separate assets. What I mean here, if you're looking at the Emirates or Etihad, they have these airplanes, okay? They have the body of the airplanes, they have the cockpit, they have some engine, they have engine there. So they can break down this asset to smaller components. Maybe the engine useful life is 10 years. The navigation system might be 8 years and the body might be 20 years. So we can this asset can be broken down to separate assets. Okay. So to recognize both the value of assets and the expected benefit consumed by the entity during the period in which the benefit are received. The engineer will tell you that the engine can last for 10 years, or maybe they have some certain number of hours flying. So the most common one is the aircraft. You can break into engine, maybe the cockpit, equipment, navigation system, okay, maybe the airplanes, the body of the aircraft itself. So this is what we call as significant part approach. But if the assets, for example, your car, you have a delivery van, okay, we cannot break the part because it come together, right? It come together, the value, we cannot sell the only the engine, right? So it come together, it doesn't come with the, so it come together. So it's much more appropriate to record it as one single asset. So how to measure the PPE? Okay. So having established that asset can be recognized, we must assign certain dollar, certain amount of money to that asset. So under para 15, AASB number 116 or IAS number 16, it says that the initial measurement based on the cost of asset, the cost of assets. What is meant by the cost of assets? I'm going to explain soon. Okay. An item of PPE that qualify for recognition of asset that as an asset shall be measured at its cost. What I mean by cost? So let us move to the next slide. What is mean by cost? It has three components. The first one is the purchase price. How much you pay for that asset. So that is the purchase price. The second one is directly attributable cost. Directly, yeah. This is an important word. Directly attributable cost. For example, you bought a machine from Germany, yeah. The cost is maybe 10 million. Okay. To bring this machine to Dubai, you need to incur another maybe 100,000 transportation costs, and then you need to assemble the machine, you need to plus another 50,000. Okay. Okay. So the cost is 10 million plus 100,000 plus 50,000. On top of that, for certain sector, for example, maybe the in the oil and gas industry, you build platforms. So at the end of the project, you need to clear the land to remove the platform. Otherwise, you will be fined by the government. All right. So that cost of dismantling should be considered as part of the cost of the PPE. Okay. So we have three types of cost. Number one is purchase price. Number two, cost directly attributable to that assets, to the purchase. Number three is cost to remove that asset and restore the site after the completion of the project. So these are the three costs relates to initial measurement of PPE. Okay, so what is purchase price? Purchase price is the basic cost of assets. So the entity should remeasure the transferred asset at fair value at the acquisition date. So what is the acquisition date? The acquisition date is the advantage of this date is that they relate to specific point of time and can be determined objectively. When did you receive the item? When the risks have been transferred and the reward have been transferred. All right. In certain cases, we acquire multiple assets. So we're going to record this as well as at cost. Yeah. Okay, let us look at this example. This is illustration 5.1 from our textbook. Yeah. Big Limited acquired a vehicle from Wave Limited for 100,000. This is the purchase price. Big Limited paid 20,000 cash. Okay. Borrowed 80,000 from the bank. So the total cost is 100,000. Yeah, the total cost is 100,000. This is very simple. So how we're going to record this? It's very easy, it's very straightforward. So our asset here, vehicle, increase. So I'm going to debit 100,000. What are the method of payment? Number one is cash. Cash will reduce. So I'm going to credit cash 20,000 and the balance is loan payable. Your loan from the bank, for example. So debit vehicle 100,000, credit cash and credit loan payable. Whatever amount you incur, that is your, call it as cost, your cost. Okay. Another example here, in case of trade-in. Big Limited acquires BMW vehicles from Wave Limited for 100,000. In exchange, Big Limited gives 70,000 cash and trade in a Ford motor vehicle currently recorded at 20,000. So, 28,000. So this 28,000 is the carrying amount of that assets. The value of the Ford at the time of exchange is to be 30,000. Yeah, to be 30,000. What is the value of the Ford? The old car is 30,000. There is 100,000. The new assets, you paid cash 70,000. So the value of this old car is only 30,000. Even though this is the value based on this transaction. Even though your carrying amount is 28,000. Can you see this? Your carrying amount is 28,000. This is the carrying amount. This is carrying amount 28,000. But the supplier of this vehicle, BMW vehicle, agreed to pay 30,000 or trade in for 30,000. So in that case, you are making gain of 2,000. This 2,000 is your gain on disposal. Gain on disposal. So how are we going to record that? It's very easy. So the first one is we are going to record the gain on disposal. This is gain. So I'm going to credit the gain 2,000. And I'm going to debit the old Ford vehicles. This is the old vehicle by 2,000. So when you do this, what happened? This is your Ford vehicle. Before this is 28,000. Now you add another 2,000. Okay. That is for the old vehicle. For the new BMW, we're going to record the new value for that. That is 100,000. This is the value of your new vehicles, 100,000. The method of payment is by cash, 70,000. And the old vehicles, I'm going to credit here 30,000. So this is credit 30,000. Okay. So this is one way of solving these questions. Yeah. We're going to recognize whether we are making gain or loss from the sale of assets. In case of losses, your carrying amount is greater than your agreed trade-in price. So in that case, you will get loss on sale of assets, loss on disposal. In our situation, in this example, our carrying amount is lower than the trade-in price. So that's why we record it as gain on sales. Okay. So the next one, what are the costs directly attributable to the assets? it can be the cost of employee benefit arising directly from the construction or acquisition of item of the PPE. For example, if you build a building, you need some material there, construction material, and then plus labor. So this labor should be included as part of the building cost when you're constructing a building, example. Cost of site preparation. You're preparing the site. Okay, this is important. You cannot build a building unless you prepare the site. You need to level the site. You need to build the foundation. Okay. Initial delivery and handling costs. Okay. Also installation and assembly costs. Cost to install the machine. Yeah. Cost to assemble the machine. So this is part of the cost. So it's fall under number 2, cost directly attributable to the assets. Okay. Cost not to be included. For example, cost opening new facility. Okay. Cost introducing new product cannot be capitalized. Cost of conducting business in new location cannot be included as the PPE. Administrative and other general overhead costs also cannot be included as part of the cost of the PPE. Cost incurred while an item capable of operating in the manner intended by the management has yet to be brought into use or is operated at less than full capacity. Initial operating loss, cost of relocating or reorganizing parts. You have this big factory, you want to move this asset, this machine from location A to location B. So that cost cannot be included as cost of PPE. Okay. For directly attributable costs, for any income earned, necessary part of readying the asset for its ultimate use. Yeah, there's sometimes get some process in between. We get income earned for that during the process. For example, you might conduct a testing first, testing on the asset. You run a test and then produce certain product for a while, and then what happened to the cost? Yeah, that is what we call as income earned. Okay. In certain situation, there is also acquisition for zero or nominal cost. Mean you don't pay anything, but you get the assets. Is that thing happen? Yes, maybe if maybe you run a NGO, non-government organizations, or charity body, yeah, charitable organizations, you might receive some donation from the public. Maybe they give you a building, yeah. For Muslim, they give you the buildings, yeah, for the benefit of the society. We call it wakaf. Okay. So what happened is you, as the accountants, how are you going to record that assets? Because you don't incur anything, you don't pay anything, you got it for free or at zero cost. Okay. So an entity may acquire an asset for zero cost or be required to pay an amount substantially different from the fair value of the assets. Okay, maybe you pay only 10%. The cost is deemed to be its fair value at the acquisition date. So you have to measure the fair value of that asset. So how are we going to do that? I'm going to show you after this, yeah? The next one is cost of dismantling or removal or restoration of the assets. The platform gives rise to a liability for restoration under AASB 137 or IAS37 as provisions, contingent liabilities, and contingent assets. So under circumstances, you have to dismantle this asset. You have to remove the assets from the locations once you complete the project. So that cost need to be included as cost of your PPE. So it is essential condition of having the asset available for use, even though you don't incur the cost yet, but you need to put it as your liability included in the value of assets and depreciated over its useful life. So this is cost of dismantling the assets. Okay, let us look at this example. Illustration 5.3 from textbook. This shows about acquisition of multiple assets. How are we going to measure the cost? Blue Limited acquired land and building and furniture at total cost of 300,000. We bought all these assets with total cost of 300,000. In order to separately record each asset at cost, Blue Limited measures the fair value of this asset. When we come up with the valuation, we found that the value of this asset that we purchased is greater than what we paid for. We paid 300,000, but the fair value of this asset is 320,000, which is higher than what we paid for. So how are we going to allocate the cost? So what we did now is we need to allocate the cost of the bundle assets over individual asset acquired in proportions to their fair value. So what I'm going to do now is I'm going to use a formula here. Okay, 40,000 multiplied by 300 divided by 320. So I'll get 37,500. For the building, 200,000 multiplied by 300 multiply by 300 divided by 320. This is your purchase price, what you paid for. This is the total fair value of assets. So you got 187,500 and furniture 75,000. So all these assets we're going to debit. We're going to debit this asset because increase in assets. And on credit side, we're going to record cash. This is the payment we made. Yeah, our cash reduce. Cash reduce. So that's why we credit the account. So in this case, we allocate the value of the assets, yeah, based on this formula, yeah. This is the purchase price divided by the total fair value of the combined assets. Okay. For the zero or nominal assets, if you acquired land, for example, at very low price, what you can do is just record the assets at that value, 50,000. The amount paid is 50,000. It's very easy, yeah. But for equipment, you got these donations. For example, this is donations. You got this for free. You cannot put free in your account. You need to come up with some figure. So you need to value what is the value of this equipment. Maybe you can go to compare the equipment this year kind of equipment, how much it costs, and then put the fair value of that assets, maybe 20,000. This is the debit increase in your equipment, and you need to credit gain here. Gain means because you got it for free, 20,000. Okay, so this is for zero or nominal cost acquisitions. Yeah, okay. We can go to another example here about the cost of dismantling and removal of asset. This is about offshore oil palm. Okay, Shaw Limited construct an offshore oil platform. Shaw Limited construct an offshore oil platform which involve the following assets. So the cost of constructing is 6 million. The insurance cost is 300,000 per annum. Dismantling is 1.5 million. So we have three types of costs here: construction cost, insurance cost annually. This is annual cost. Okay, and then we also have another one, dismantling. Okay, always remember this insurance cannot be included as your PPE cost because it's a recurring expense. Next year you're going to pay another 300,000. The following year you also need to pay maybe around 300,000. And this platform has a useful life of 20 years. Okay. After that, it must be dismantled. After that, it must be dismantled. So what I'm going to do here is, how would Shaw Limited account for the cost of assets in the year of construction, assuming construction costs have been fully paid? So how are we going to do that? Do you have any idea? We are not putting these costs as our asset. This will be expense. This will be expense, insurance expense. It'll go to statement of, yeah, finance, profit and loss and comprehensive income. This is our insurance expense. Our cost will be the construction cost plus any cost directly attributable to the assets plus dismantling cost. So the total cost will be 7.5 million. So how I'm going to do that? I'm going to debit all platform. This is the platform. It's 7.5 million. Okay. And the cash paid is 600,000. This is debt credit. Cash paid 600,000. And this dismantling fee liability, this is your liability. This is thing that we are going to spend after 20 years. So this is your liability. So I'm going to credit that 1.5 million. Let me repeat it. In this example, Shaw Limited construct offshore oil platform that can be used for 20 years. That can be used for 20 years. So in this example, the insurance cost 300,000 cannot be recognized as part of the cost of PPE because the nature is annually or recurring expense. So it should go to the statement of profit and loss and other comprehensive income. So for these two costs, the 6 million and 1.5 million, that will be our offshore all platform costs. So I'm going to debit offshore all platform costs 7.5 million, credit 6 million cash paid, and the balance 1.5 million will be considered as dismantling fee liability.